Hey folks, CB3 here with another live update. Today is Monday, March 24th. The S&P 500 finally snapped its 4-week losing streak, finishing positive on Friday, March 21st, representing a gain of about 0.5%. What's up ahead for this week? What's going to happen with the Fed's decision? Stay with us. CB3 Live Update begins now. As we all know, the market has been very skittish for a month now because of the DOGE-driven job cuts in Washington and also because of the tariffs that are literally becoming international at this point. But after 4 consecutive weeks of declines, the S&P 500 managed to finish in positive territory on Friday. The index previously entered correction territory on the 14th. That means it fell more than 10% from its February 9th record high of 61.47 and dropped below that by 10%. We see these corrections every single year, with some exception. Last year was one of them. And so when clients are calling me and saying, gosh, we haven't been here before, well, sure we have, but 8 out of 10 years we have these, but there are a couple years in a decade when we just don't seem to have corrections. So this is just old territory. We've been here. So the week started strong with the market surging about 2% on Monday, and then we started to have the Doge and tariff warfare stuff going on that made the market sell off again. Wednesday actually brought relief as the Fed maintained a steady interest rate policy and indicated they would continue monitoring economic indicators, prompting a positive market response, meaning they didn't bias it toward a hawkish position where they're saying that we're going to have to go back and raise rates, because certainly nobody wants to see that. Thursday was relatively uneventful, and Friday closed the week on a very positive note despite concerns about Trump's tariff issues. Typical negative sentiment that's associated with triple witching, which is when the stock options and stock index futures expire. So we got out of that. End of the market at Friday, like the last 30 minutes, and I know because I was trading, it was very positive. So I'll be very interested to see where the markets open tomorrow night. I'm recording this on Saturday for publication on Monday. So looking ahead to this week, what do we see? The PCE, personal consumption expenditures for February, will take center stage, with the Federal Reserve watching this because they are basing their projections on growth and raised inflation fears based on this forecast, both headline and core PCE. And I talk about both of these on my monthly CB3 Live show. If you haven't watched it, go back and watch the March show. We talked about that. So other U.S. releases, personal income and spending, final reading of fourth quarter GDP expected to show 2.3 annualized growth. That would be a good number. Consumer confidence data, which has really stunk the last 2 months. So we're going to get that as well. And then durable goods orders. Housing market updates. But as you know from my last show, if you didn't watch that, just go back and catch the housing segment. The most important thing here is that the number of houses being listed is dropping. As you know, we've added international holdings to CG and GI. So internationally, we're watching data there because the international markets, in particular Europe, has outpaced the U.S. dramatically so far this year. Because of that, we now have a 9% holding in CG in the DAX 30. That's the German index. So we're pleased so far with how that's performing. We also have a holding in Japan that's at 6%. And in GI, we have a 9% holding in the Eurozone. That's ticker symbol EZU. That's an ETF encompassing quite a few stocks in the Eurozone. So we're picking up that overseas alpha, if you will. Inflation data coming to us from the UK, France, and Spain, Germany's unemployment rate. We didn't used to follow this data that closely, but we have to now because of the trade tariff drama. So all of these markets, if you look at the world economy and break it down into 3 categories, Asia, Europe, and America, that's what we're following now on your behalf. So we're investing in all those 3 zones for all accounts. Despite the fact that there are concerns about tariffs and the ongoing Doge issues and even the judges that are shutting down the Trump initiatives, I think overall the sentiment on Wall Street is pretty broadly optimistic. According to FactSet, 55.7% of analyst ratings on S&P stocks are buys, which if maintained would represent the highest monthly end percentage since August of 2022. So this figure exceeds the 5-year average of 55%, suggesting that the professionals out there, like myself and others, are seeing opportunity amid the recent correction. We went to as high as 40% cash in CG a couple weeks ago and 22% cash in GI. We're entering the market this week at 16% cash in CG because it's the riskier program, and GI is now fully invested because of the strength I saw as the market closed last week. So as we head into this new trading week, I and many other investors are closely watching the economic indicators that I've mentioned here. We're going to see what happens with the Fed and if they have any new leanings, and we'll also watch for any new developments in the tariffs and the Doge layoffs that would affect market sentiment and create angst for people. That's where it is. Thanks for listening, guys. We will see you in a week. Keep listening. I tweet every day. Follow me. We'll continue to keep you updated with CB3 Live updates. See you next time.